Well, that was quite fun yesterday. The Fed cut interest rates somewhat more than expected, and as it seemed to be the only thing discussed this week, I released a video on Wednesday on why I started the position in L. So today, instead of looking at the Fed, I want to look at the impact the rate cut has on my portfolio, and specifically on PayPal. And I want to go through the news of the growing quality portfolio and talk about a partial sell I made. So if you find my content educational, you learn something from it, make sure to subscribe to my channel because I try to release 3 videos a week where I try to give unique insights and unbiased perspectives on stocks. Now let's start off with PayPal because PayPal was up 6.1% basically yesterday towards a new 52-week high because of the news of the rate cut and how this will have significant impact on the income statement. Now, I will take you through why that is, but first I want to take a look at some news that was kind of going unnoticed on Wednesday. Now, the news that came out was that PayPal and Amazon team up in their first step of branded checkout collaboration. Now, the part where it says branded checkout is very important here, because we know that PayPal has the best margins on branded checkout. But Mizuho securities analyst Dan Doloff, who rates PayPal at outperform with a price target of $90, viewed the news positively. While this is only limited to checkout at merchants that participate in Buy with Prime, it marks a significant first step for PayPal branded checkout to collaborate with Amazon, he wrote. Now, this is true. It is a first step, and it is only with the Buy with Prime partners. So it might be important to know what Buy with Prime is for those who don't. So basically, Buy with Prime is where a partner of Amazon allows customers who shop at, in this example, at Bare Minerals, to shop through the website of Bare Minerals, but use all the options that they get with Amazon Prime. They can buy it through Amazon on the website of the partner of Bare Minerals in this case. Now, what they just came out with Wednesday is that for these partners, PayPal branded checkout, the branded checkout button, will be an option to pay with. Now, this is huge for PayPal because that means that they get additional new customers. Now, it is with the Buy with Prime platform. Don't get me wrong. It's small. It has only a few partners. But still, it's a first step. And that first step is really, really important in my opinion. But then, let's look at what is going to change for PayPal on their income statement, like I just said. Because we had that first rate cut. Now, the first rate cut is not that good for PayPal in terms of their transaction margins in some way. But another way is. So let's look at what is positive first. Now, what we see here from Investopedia is what they say, how do multinationals benefit when the dollar falls? So when the rates are cut, the dollar becomes weaker generally. So how do these multinational companies benefit when the dollar falls? Let's say a US company does a lot of business in Europe and the euro is strong against the dollar. The company's profit from Europe will be denominated in euros, and when those euros are converted against the weak dollar, there are more dollars for the American company and a nice jolt to the bottom line. Better profit margins usually translate to better results for shareholders. So when we can say that in general, a lower interest rate weakens the dollar because the high interest rate strengthened the dollar. And we have seen this process already happening. So PayPal should really benefit from a weaker dollar, from the lower interest rates in this sense. So what is the negative of this story for PayPal? Well, we can see that in the latest earnings call, because here Jamie Miller, the CFO of PayPal, said, thank you. So maybe I'll start with the biggest contributor to transaction margin dollar growth and talk a little bit about the second half there as well. So we were really excited to see the broad-based strength in the acceleration. There's a lot the team has underway, and there are several significant contributors to the growth. First, we talked about, in my prepared remarks, interest income on customer balances. That was about 3 points in the first half. But second, and really very strong, was branded checkout. It continues to grow profitably as a healthy contributor to transaction margin dollar growth. Braintree, which you mentioned, it is back to contributing to transaction margin dollar growth, which we are really excited about, and it's really great to see some progress from our shift and focus there. So a benefit for the transaction margin dollars is the interest on customer balances. Now we know a lot of people store some money on PayPal, so PayPal has a lot of stored cash on their platform. And they can just push this into short-term treasury bonds. Now with the rates coming down, that means that there is less money coming from this. Now PayPal knows this, they have this guided, or they have this in their guidance, but still, it does and it will offset some of the gains that will be made from the stronger dollar, or the weaker dollar, I'm sorry. So then overall, what do I think about PayPal? Well, basically, I get more and more enthusiastic about this stock. We see more and more good news coming out, and they really seem to have the momentum going in their favor. So when we look at it, we see the PE still at only 18.8. Now, this is ticking up, of course, because the company is at a 52-week high. We see the forward PE at 17.2. So this is really going up. This is simply really going up. Once again, we see a share price at a 52-week high. This makes sense, but it's also really good to see. And it's still very undervalued in my opinion. Now we are getting up there. It's getting closer to being more so towards a fair value, but still not. So that's really good. And I like to see this. So once again, PayPal, they really have the momentum going in their favor. They seem to be turning the ship around. It looks as if they have turned it around and we are starting to get that first wave of momentum, the first initial good steps really happening here. We see the Amazon partnership, we see Fastlane doing really well. We see positive notes from the executive. In the latest conference that Alex Chris attended, he wasn't even actively trying to sell the stock. He was quite relaxed, he sounded quite relaxed, but still very determined. And sounding as if he was just really confident in the business that he was building over there. But then there are a few things I want to go over with you regarding my portfolio. Because there are a few highs, a few lows, some things I will have to mention. A stock I sold, a stock I bought. So let's go through it really quickly. First of all, we have Duolingo. And Duolingo just made a new all-time high. We have here a year to date. But we can also go to a 3-year chart, basically since the IPO, or let's say all time. And we can see Duolingo at a new all-time high. And even though they have a last 12 months, so a trailing 12-month PE of 186, and this sounds incredibly high, they have a forward PE of 58.5. Now, I'm not going to say that is low. Not at all. It's not. 58.5 is really up there for the forward PEs. But if we figure that they are expected to do $4.33 of EPS with 87% growth, then that might be not all too bad after all. Now it will, or it is expected to slow down the EPS growth in the year thereafter to only 28.4%. And the year thereafter to 25.8%. So with those growth rates, we will not really see a 60 forward PE. But then again, the stock seems to be positioned quite well if it doesn't trade up all too quickly, all too far, to not have one of those massive drawdowns that we have just seen in Celsius, in Lululemon, in Elf. So that is really positive for this stock. Now it's at an all-time high. That's just what I wanted to mention. I'm now up 60% on this holding in the last 2 months. Now, most of the time when you start throwing numbers out like that, that means that it's poised for a pullback. Quite honestly, I wouldn't mind it doing so, because it's very much smaller of a position than I would have wanted. I got in right here, right in this dip right here. And, well, as you can see, it basically never looked back. So I find that quite a shame. I hoped it was down a bit longer, because I only have a minor position in it in my personal portfolio. I think over there it's only like 2%. So that's a bit of a shame. I wished it wouldn't go up as fast as it did. But who am I to complain about it going up 60%? So then we have Lululemon. And somehow it looks as if this stock somewhat made that turnaround stick. At first, after the earnings report, hold on, let me get a better chart of this. So at first, after the earnings report, the stock traded down still slightly, but it seemed to be trading up. Now today it started up even more positively and traded down slightly. The stock is now up about 10% from the actual lows, or from the most recent lows after earnings. And it looks as if the turnaround might be sticking. Now, I don't want to get too enthusiastic too soon here, because I think it's really early days, but the comments made by management, by Calvin McDonald, well, they seem to satisfy analysts. And I mean, I think this is some cautious optimism, and that's also a bit of my perspective. Now, Lululemon, of course, holds quite the weighting in my portfolio at 16%. And I'm down slightly on the position. We can see that here, about $65 or about 8%. So, I mean, 8% down, that's not too bad, but we have to remember it came up a bit, and around the $250 mark, I averaged down slightly. That's also why it is as big of a holding as it is at 16%. Now, I don't mind it that being that big, because I do see a lot of positives for the stock, and I do think that the sell-off was overdone. However, like I said, for me, also cautious optimism. Now, then you may have already seen it in one of the previous slides if you really studied my holdings. And what I did is, like I said last week, basically, I sold a minor part of my Starbucks holding. I think it was about a third. And I placed that money elsewhere. Now, why did I do so? Because, well, we saw news of a director buying about, I think the number they came out with was about $40,000 of his own money. And I sold it slightly. Well, the reasoning goes back to what I've been saying in my prior videos. I bought this stock with the intention of a turnaround through the activist investors. And I thought the stock would be able to go up to 110, 120 in the coming 1 or 2 years. Now, it basically went almost all the way, well, basically a day after I bought it, right? And that doesn't mean that I had such good timing. It was sheer luck. I'm not going to claim that I got anything other than that. But it got almost there. So I think that it has done, or it has gotten a lot of the gains that it was going to have pulled forward. So then when some other companies started selling off, of which I thought it would, I figured that was a better place for my money at this point in time. That's why I sold about 1/3 of the Starbucks holding. And I put that money in this stock, in L Beauty. Now, I made a video, which I will link up here, I think it is, about why I bought it. Now, not all too many people went to go and look at that video, but I think it's quite informative. I think it's a really good video, and I highly recommend you check it out if you are interested in this stock, because I highlight the good parts, what I think are still some of the issues, and what I'm looking for. Well, basically, if they go well or if they go south, because this stock does hold some real risks. Now, I also think this stock will trade off a bit more. We can see it in the chart here. Basically, I think it will go down more than it is right now. I only bought in for 2%. It's a very tiny holding of mine. But I did make my initial buy. Now, then we have some more news on Celsius. Somehow this stock is also down, or was down yesterday, for about 0.6%. We saw a couple of companies down. What was most surprising is that we also saw Solar being down, and Phase, Solar Edge, for example. Those were also down. Monster Energy, Monster Beverage was also down, and Celsius as well. Quite surprising if you ask me. However, we also saw the 10-year interest rate, or the 10-year yield, jumping up a bit as well yesterday and today. Now, the news that we got was that the Celsius Holdings insider sold shares worth $21.4 million. Now, John Fieldley, Director Chief Executive Officer, on September 12th, 2024, sold 626,000 shares in Celsius Holding for $21.4 million following the Form 4 filing with the SEC. Fieldley has controlled over a total of 1.2 million shares of the company, with 1.2 million shares held directly. So basically, he sold off about 1/3 of his holding in Celsius. Now that doesn't look all too good when you see the stock being down this much. Now we don't know the reason for him selling, although in general I'm quite skeptic about CEOs selling such large chunks of their holding. I am not a fan of this. I don't like it in Palantir where the CEO sells all the shares he gets. I don't like it in Salesforce with Mark Benioff where he sells all the shares he gets. I just don't like to see it. I mean, this is your company, right? You believe in this. This is your future money. You're, well, basically your baby, right? And we know how John Fieldley looks on the conference calls. He always holds a can of Celsius in his hand. He's always making sure Celsius is all over the picture. But he is selling, if I'm not mistaken, 1/3 of his position in his company. Yeah, I don't know. I don't really like to see this. It doesn't have to mean anything at all. Let that be clear. It's just something, my personal preference. I don't like to see it. Okay, so then finally we have Monday. This is the last stock I want to talk about. Monday is up again 5% on, well, the rate cuts. I thought this would happen. I said this in the last video that I thought that, well, they either do really good in the rate cut or it was just the anticipation. That was a bit something I wasn't all too sure about. For now, it does really good. So that's positive. But the news I want to go over, or I want to highlight here, is that next week, Monday, we'll have the Elevate 24 in, well, NYC, New York City. My best guess. They have an investor Q&A session. Now, I will most likely go over what was said there if they have anything meaningful. I guess they will give more information about their newest platform that they are building and are, well, it's expected to be released at the end of this year. Other than that, I'm not all too sure what they will say, but if there's anything meaningful, I will cover it. And the reason for it is that Monday, together with Duolingo, is basically my favorite position for the company, right? PayPal was a huge opportunity with the valuation it had. Monday, I really like the growth prospects it has. I'm up about 30% on the stock, so that's also really good. Not as well as Duolingo, as we can see, but still up 30%. And I really like this company. I really like what they do and the opportunity it has in front of it. Now, once again, if you haven't checked out my video about ELF, make sure to do so if this interests you. I got a bunch of views on my video about the issues I saw with ELF, but not in the way deeper dive I have on why I then bought it 3 weeks later. So if this interests you, make sure to check out this video. I will link it here. And with that being said, thank you for watching. Make sure to subscribe if you found this video educational and you learned something. And make sure to hit that thumbs up button. Now, thank you for watching and I hope to see you in my next video.